Welcome, everyone, and thank you for joining us today for our panel discussion, where we'll be talking about taking tax automation to the next level, practical tips for automated companies. My name is John Kennedy with our solution consulting team at Thomson Reuters, and we'll be joined by Kate Bowden and Sai Avula here in just a few minutes, where we'll do some introductions. But before we get started, I want to take care of a few housekeeping tips. First, before we begin, at the bottom of your screen are multiple application widgets that you can use. All the widgets are resizable and movable, so feel free to move them around to get the most out of the desktop space. You can expand your slide area to maximize it to full screen by clicking on the arrows in the top right corner of the box. If you have any questions during the webcast, you can submit them through the purple Q&A widget. We will try to answer these during and at the end of the webcast. But if a more expansive answer is needed, or if we run out of time, it will be answered later via email. Please know that we will be capturing all your questions. For the best viewing experience, we recommend using a wired internet connection and closing any programs or browser sessions running in the background that could cause issues. Webinars are bandwidth intensive, so closing any unnecessary browser tabs will help conserve your bandwidth. The webcast is being streamed through your computer, so I'm sure you've noticed there is a dial-in number, no dial-in number, I should say. For the best audio quality, please make sure your computer speakers or headset are turned on and the volume is up so you can hear the presenters. Some networks cause slides to advance more slowly than others, so logging off your VPN is recommended. If your slides are behind, pushing F5 on your keyboard will refresh the page. You can find additional answers to some common technical issues located in the yellow help widget at the bottom of your screen. The on-demand version of this webcast can be accessed at any time using the same audience link that was sent to you earlier. Note, we will also be sending out a copy of the recording to you. And with that, I'd like to introduce you to our presenters today, Kate and Sai, and they'll briefly introduce themselves, and then we'll get right into the panel discussion and our Q&A format today. So first, Kate Bowden, Principal Consultant of Chordiance. Over to you, Kate.
Hi, everyone. As John mentioned, my name is Kate Bowden, and I do work at Chordiance. I've been with Chordiance just a little over a year. Prior to that, I have about close to 10 years experience doing tax automation implementations. Prior to that, I actually worked at Sabrix, the startup that Thomson Reuters purchased the OneSource application from many years ago. And a lot of my background has been with accounts receivable and with Oracle. Oracle integrations was the area that I worked with when I worked at Sabrix. I was a senior analyst working on the Oracle integration.
Great. Thank you, Kate. And Sai, can we go over to you?
Yes, I'm Sai Avula. Nice to meet you, everyone. Meet you. I'm a managing director at Grant Thornton, and I lead our enterprise tax automation practice. It is part of our new service line called Tax Digital Consulting. Majority of my career was spent in the consulting space, in automating indirect tax functions for large corporate clients. I was fortunate enough to work with some of the large Fortune 50 companies on their global automation journeys, and looking forward to the panel discussion today.
Great, thank you, Sai. So as we begin, I just want to level set. When we think about the next level of automation, obviously that might be different for different types of companies where they might find themselves operating today. So what I mean by that is for some companies, automation might mean having a tax solution or some tax tools in place, and that would be the next level for them because currently maybe they're working with Excel and Access and doing things in a quasi-manual perspective. But we'll have others who have joined us today where they already have some quite extensive automation to their current process and want to take it to the next level. So for them, they might have a robust tax solution in place, some tax tools helping with everything from determination to compliance. And for them, it might be bringing additional analytics or bots into the process. So we'll talk about both levels of automation today because we do realize that different companies are certainly at different levels of automation, even if we think of some of the largest companies out there within the Fortune 500 and so forth. So with that being said, we'll start to lead into the questions today, and we'll have the expert opinions of our panelists today. Just to introduce, we've had an unprecedented amount of global change since March 2020. It's impacting all our personnel and work lives and creating severe business disruption. So with that, with our first question, in your view, from what you are seeing with your clients, what has changed the most for indirect tax teams? And with that, if we could lead off with Sai to start us off there.
Yeah, thanks, John. I think we all admit, right? I think the change we're going through now, none of us have been through anything similar before. When it first started, I would say I was part of some large indirect tax automation projects. And one of the initial reactions was they were put on pause because some of these large international projects needed travel between teams that needed to do. So that was some immediate reaction there. And then obviously from a jurisdictional standpoint, most of the countries quickly reacted with some changes of their own, whether it's tax deferrals or payment deferrals. In some countries, they even reduced the VAT rate. What it landed is, like, once they have done those changes, whether it's VAT reduction on hospitality or culture or some of these certain sectors, how did these organizations took that message and implemented it in the systems, kind of drove the next wave of changes, right? I think companies that were better prepared in terms of their existing setup were able to quickly react to those changes and adapt. And I think some of the companies that have not, had to scramble to get their systems in place to accommodate some of those changes. I'm going to pause there and see if Kate wants to add her perspective.
Oh, sure. Thanks, Sai. So I guess, I absolutely experienced exactly what you said right at the beginning. Everybody just about a 3-month pause. It was just everything stopped, travel stopped, plane tickets canceled, things like that. And it has picked back up again. Definitely, right around July, there was, again, that 3-month pause. Right around July, several of my clients did go ahead and go live. And as to your point, the clients that were able to do that really were positioned well to pivot quickly and make some decisions and move forward. And it's been going fairly well. Another thought that I had around this is, the teams themselves needed to redesign how they were working together. One of my clients was very face-to-face intense. When we worked together, the expectation was you were visiting the office, working together side by side in the same room with sort of a war room type of approach with doing the testing, having everybody in one area. And that change was fairly dramatic to switch to doing everything remotely, doing some Zoom meetings and getting work done and meeting back and checking in. And that, I think a lot of companies have pivoted with that just all throughout. And I think it's gone better than expected, but there are still some challenges around that.
I remember
thing.
like to the comment about, oh, sorry, John, go ahead.
No, go right ahead, Sai.
I was going to piggyback a little bit. I think when Kate said how the teams started working through Zoom, I remember, I mentioned about how some of the countries have changed the VAT rules. For example, UK reduced their VAT rate in some areas from 20% to 0% for e-books and online journals. And then also some other areas they reduced from 20% to 5%. I think we had to quickly, there was a small project where we had to adjust the rate. Obviously, products like Thomson Reuters already delivered that content quickly, right? Starting May 1st, 2020, the content was updated. But at the same time, these large organizations have protocols on how they deliver from dev to QA to prod. And I echo, in a previous world, we were just operating differently on how those things done. In a virtual world, to get those things done, we quickly adapted through Zoom meetings and, it's still aligning through that protocol, but in a different fashion.
Thanks, Sai. Yeah, and it's definitely interesting how quickly, I'd say before the onset of COVID, few people knew what Zoom was, right? And now it's a household term and people are using it multiple times a day. So the way in which we adapt is pretty amazing. Thanks for that. So next we want to kind of bring it back to what are some of the levels of automation you see in your practice out there? In the introduction, we spoke a little bit about there being some different levels when we think of ourselves as being automated, and obviously different companies automate themselves to different extents. But on this one, Kate, maybe we can start with you, and then just see, what do you see out there as you speak to some of the larger tax teams you're dealing with in your practice?
So automation actually, I would say, runs the gamut. Every implementation that I work on, and this goes for a variety of sizes in the companies, there seems to be, I don't know, maybe three basic groupings. One grouping is, people are really, they're chasing. They're gathering the data on spreadsheets, and, chasing what the business has done to be able to identify what it is they need in order to file in the various jurisdictions that they're located in. And there's several experts, depending on how big the company is. It could simply be one person who is handling it all, or a dispersed team where there are individual country experts. Regions in the U.S., maybe some experts there that know all of that product, know the information, and they're gathering maybe from several different systems, multiple spreadsheets, putting it together, perhaps handing it off to an accounting firm to do that filing for them. But a lot of manual work. That's kind of one grouping. The next grouping has some automation in it. They maybe have already utilized software specifically for tax, something like OneSource, but it hasn't maybe been fully configured. The first go live that they had is essentially what they're working with now, even though their business has changed quite a bit since then. So that can also have a variety of spreadsheets added to it. I've seen people work with Access databases to try to gather all that data they need, where they had that initial implementation, that data was there, but enough changes have happened, and they aren't quite up to speed, up to date on matching what their company looks like today. And then there's another group where things are just moving along just fine, and they just need a routine upgrade, where they have integrated throughout their full ERP process, their full system perspective, they do have that integrated with the data flowing into for tax automation. And it's just a matter of moving that forward, moving that up to the next release, and is quite simple. I don't know, Sai, if you have any other flavors of clients or other things that you've seen.
Yeah, I think I like the levels of automation. I recently saw a slide where you said 3 groupings maybe. I think that slide resonated with me. They also kind of depicted 3 levels of automation. One would be basic automation, like Excel. We still write macros and formulas within Excel, like all tax department, they do, right? I mean, that's the tool they have. They can write formulas and macros. Nobody can take that away from them, right? They can always do that. So that thing, to me, that's like level 1. And I think the level 2 automation that slide showed was tax engine. And we have organizations using tax engines today. It's already out there. And then Alteryx, Domo, they are a level up from Excel type of automation. And then level 3, what I saw was AI, predictive analytics, and then maybe more robust use of RPA. And then what was more interesting was during that discussion, some of these organizations said, hey, we play in all those 3 spaces. Like corporations, it's not like just they're in level 1 or level 2. I think certain functions are in level 3, but certain departments are still in level 1, or certain functions within the department are still in level 1. So anyway, I thought there was an interesting comparison that I found.
So as you were talking, Sai, I'm going to answer the question in a little bit different way. Within organizations, there's actually different levels of how integrated a tax department is within that organization.
Yeah.
How strongly they're aligned with the order to cash data flow, or in procurement and procure to pay, or source to settle, depending on the phrase you use in your company. But there's a level of integration where sometimes a tax team really is off on its own, and it just considered a back office process, and then in other integrations that I'm working on, even the departments, some of them have better communication, really, because if you think about indirect tax, it really does touch all steps of those processes. That data elements are there, it's integrated in that. And when you look at an organization that the teams work strongly together, there's some cross-functional communication. The tax integrations to get to get the tax engine implemented becomes easier simply because of that integration. And if you can then add in some tools to help make that go faster, do some robust testing, things like that. That's where RPA really strongly comes in, as well as, and really document what's happening. That can go very, very, very smoothly. It's really a joy to work on a project like that, where the tax team really is integrated all throughout. If that makes sense. I don't know, John, did I go off topic on you?
No, that's perfect, and totally agree. I think it's really important for the tax team to have a good relationship, right, with their IT counterparts or finance counterparts. It can make a drive toward automation that much easier, like you said, and that much quicker, and to have the organization be that much more receptive to it. Otherwise, sometimes tax will want automation, but they need to battle those groups versus being teamed up with them. So I think it's a great point. Yeah. Great. Okay, so now what do we think the tax department will look like in 2021? So we've had so much change and onwards, even beyond 2021, whether it be from a people, process, or technology perspective. What do you think has changed the most and why? And with that, maybe Sai, you could lead us off with that one.
Yeah, sure. I think I just want to touch on pre-COVID briefly, John, because I think it's important to set the tone.
Sure.
Because pre-COVID, we were seeing a lot of bullish nature in the organizations where they were investing in technology to begin with. We saw large ERP implementations, and people wanted to, maybe I should say too, there are large ERP projects kicking up pre-COVID, and there was a trend in the market where they were also outsourcing the tax department. And again, that's not necessarily reflective of the entire industries, but as you know, there are some big companies such as GE and others that have outsourced their tax technology function. So we have seen that trend to grow pre-COVID. And I think with COVID, everything went into pause, as Kate alluded to your previous question. And now it's picking back up. People are realizing, they have to still file the returns, still do the job. And all these jurisdictions are implementing some regime rate changes that need to be accommodated, right? So they're bringing back those functions. But what also happened is, whether there were furloughs or layoffs or whatnot, there's a reduced workforce that they're dealing with. And I think that is pushing most of these tax departments or the tax departments that were relying on IT people to get some of the work done into more and more automation than what they have thought it was before, right? And where I would see like 2021, automation for sure will be the driver, because now that we have seen we can execute remotely, now that we have seen we can possibly do more with less, I think there would be a more bigger drive in automation. But I also suspect at some point that outsourcing sort of nature might also pick back up in some industries where they want to stay lean. And with these changes in automation, they might see some functions can be better done outside. I think that might pick back up as well.
Thanks,
So I'm gonna
and I think that's
add-
an interesting perspective, is the whole outsourcing aspect to taking things to another level as well. Definitely some companies turning toward that. Sorry, Kate, go ahead.
Oh, that's okay. So I just wanted to add on a little bit to what Sai mentioned. He pointed out that there are tax changes. The various regimes around the world are changing their tax rates, more of them more rapidly than they were certainly pre-COVID. There definitely was some movement with it. There always is movement around that, and there are always changes. And these are things that in the past, tax departments have been able to be on top of it for the jurisdictions perhaps that they manage. And the ones who have gone towards automation have realized that actually we have a bigger footprint than we have people available to monitor that and make updates for. And that's where I think automation really, really started. And the momentum really is just moving faster. I think there are, I think we'll continue to see, we're starting to see mergers and acquisitions, divestitures. People are selling things off. The structures of the companies are changing, just trying to deal with the changing tide. So you've got the changing of the businesses happening at the same time that jurisdictions, tax regimes around the world are also making changes, trying to make things easier, things like that. So the combination of those two is going to make it difficult for a tax team that was perhaps fully staffed with full IT support. Now these teams are smaller. I think to Sai's point, that it does make sense that if you can get some more automation in, that there also could be the possibility of having this function outsourced more. It is something that GE has done, and that's a really interesting point. I haven't seen that yet in my clients, but I can see that flow that you're talking about.
Yeah, I guess just to add one more, I think when I thought through further while we were discussing, I think moving to cloud, when I said outsourcing, it might not necessarily be like the actual tax function outsourcing, like some of the infrastructure could be outsourced as well. I think that trend in the last 4 or 5 months, Kate, I have seen it grow. Like clients who are either upgrading or implementing new tax engines, they would rather prefer a cloud version so that they don't have to maintain, right? Mm-hmm. I think, so that could be a ongoing trend, John, to your question in 2021 and beyond. I think most tax engines and tax operations could go cloud.
I think that trend is not just in tax, that we're seeing ERP implementations and that are cloud, and cloud going along with your tax engine also being cloudy, if that's an appropriate term to use. And you're right, that doesn't necessarily outsource the tax department. That's really looking at streamlining the level of IT support that's required to run these things at each individual company level. The cloud definitely is a trend that I've been seeing pre-COVID as well. So that, I agree with that too.
Thanks, good points. Yeah, and I think across some of our recent implementations over the past year, and then going back, let's say 2-3 years before that, it's such a drastic change to companies wanting to go the cloud route versus having an on-premise solution. Just a drastic change, but there's a lot of reasons for it, right? So, yeah. Great. Okay, next, what are some of the areas that you observe where companies are missing out on the benefits of having a more automated tax process? So what are some of the perhaps pitfalls to not automating that you've seen out there? And with that, if we could start perhaps first with you, Kate.
So, it's funny, I took some notes early on because I thought this might be a strong question that would come up. I'm currently not fully thinking of it.
And we can lead off with you, Sai, while you're checking your notes,
Sai,
Kate.
if you don't mind saying something, it might remind me.
Yeah, absolutely. When we say automation, obviously you're automating your functions to achieve efficiency, right? If you're doing X amount of work, you want to get that done faster, better, cheaper, right? I think that's what most companies do when they think about automation. Pitfalls are, John, the question was, what are some of the benefits they're missing out when they're not doing automation right? Was
exactly.
that the question?
Yes.
Yeah. So what I would see is before we embark on a implementation or automation project, one thing we always do is requirements gathering or business case. I think that needs to have a solid foundation. We need to think through what are my processes that are pertinent for automation and automate that. And there's an element of process change that needs to happen with automation. And a lot of times what happens, and I can give you an example of a company that implemented OneSource indirect tax engine, globally. SAP was their ERP system. So we rolled out that automation, John, in the United States and Canada first, and we took it global. It was a country-by-country rollout, right? Because of the way the organization is structured, it was fairly decentralized. I mean, we tried to automate, and have a global process and template to the extent possible. But the company organization, the way it grew, there were several acquisitions, and it's very decentralized. Now, we went live with country by country. We are still, going live with some of the other countries. And all of a sudden, we heard Germany apparently was still using manual calculations, even though they went live with OneSource 6 months ago. And that was a shock for the implementation team to know, hey, we thought we went live with the system. Why are you recalculating everything in your old? So they had a legacy system. It's almost like a tax calculator, and they were comfortable with that, right? And even though they went live with the newer SAP integrated with OneSource, they were taking the data out every month, putting that in their old calculator to confirm before they file it. What that begs, like, to the benefit, to your point, pitfalls. There was no benefit with automation there because the company and the resources are still spending a lot of time in doing what they used to do before. I think lesson learned for us, and some of the benefits would be, like, when we prepare a business case and we are rolling out this automation, we need to get the stakeholders onboarded, right? And then B, the business people that are involved needs to have a buy-in. It's not like, sometimes it's top down, like, hey, we need to automate centralization, But I think that needs to go down to the grassroots level sometimes to make sure there's an adoption angle to it. If there's no true adoption, they would never get the true benefit. Anyway, that's one example that I could think of.
Yeah, I think a good one, go ahead, Kate.
Oh, okay. So, thanks, Sai, for picking things up and starting with that question. There's some small things that people miss out on when they don't standardize. I know there's so many clients that when we embark on the process and start looking at their master data, the customers that they have, there's duplicates, incomplete information. They don't actually know who the top customers are for them because they have 17 different versions of the same customer. So it can be very helpful to standardize, looking at things from a tax perspective. It even helps with credit approval, to really understand the exposure that you have with these customers. And you can say the same thing on the purchasing side. Understanding just what your data looks like, what your purchases are, especially with companies that are just simply, they're making ad hoc purchases. They haven't identified, maybe they've identified their direct purchases, that, the materials that are going into whatever they're making, but their indirect purchases, they really don't have a good classification of that. And when you're working with a tax engine and you go through the effort of classifying that data, identifying it ahead of time, there's benefits for the entire company. It's not simply to make things easier for the tax department to file. It actually helps organize all of that data that, it hasn't been kept up with, or maybe things have been merged in from multiple different places. It gives more of a framework to allow for that better picture for the entire company, upper management as well. I
can relate to that, Kate. I think I can relate to that master data example as well, because we can think. I go back to SAP, that, like you said, you're dealt with Oracle mostly. There was an implementation where, in order to meet the timelines, we implemented a tax engine with the ERP system. things are connected, data is flowing, boom, done. But to your point, if the categories are not tax sensitized, and if the categories are done based on procurement department's vision, not the tax department's classification, then the net benefit doesn't exist, even though you automated the process, to your point. So it's got to be a marriage between the two, understanding the business process and making sure the master data is cleansed and aligned with the tax department needs. Otherwise, you won't see true benefits. That's a good example.
Yeah, I think great points made in relation to that question. One, to your point, Sai, you can have a tax tool or solution in place, but if you're not using it, or if you resort back to your old ways, are you really maximizing, or are you really automated? And then to your point, Kate, certainly looking at the data and using the data wisely is very important, and making certain that you're working with good data as well. Great. All right, next maybe we can pull one out, because we've got some questions, of course, coming in via the chat, and I'll pull one out that seemed pretty interesting. It asks, what are some of the key challenges and achievements that you see out there, and how are you advising clients to maximize those efforts and succeed in these automation projects that you're involved with? And with that, maybe Sai, you could lead us off with that one?
Yeah, John, for my benefit, could you read the question again, what it came through?
No problem, and let me just scroll back in the chat. So basically it's saying, what are some of the key challenges and achievements that you see out there, so I guess in your practice, and how are you advising clients to maximize these efforts and succeed in their automation projects? So, what advice do you give to ensure their success?
Yeah, so some of the key challenges I've seen over the course of my career working with these large organizations, and even small, medium, whatever organizations are, getting a buy-in for the tax department always seems to be a struggle. I think people would assume that tax, being the largest consumer of any ERP data at any organization, at the end of the day, once you implement a ERP system or a tax engine, tax department does touch or consume much of the organization's data from a jurisdictional filings and reporting obligation standpoint. But it's interesting that they are not always the front of the, on top of the mind for organizations, right? They always see tax more like a cost center. Hey, I got to do it. There's a function out there to get it done. Versus, let's say, on the CRM, side or the sales side, which are the critical drivers. I think getting a seat at the table, I have seen as a challenge. But I think once you cross that hurdle, you both parties, both the organization and the tax department, they reap immense benefit. I think tax can add a lot more value if they can automate some of their repeatable processes and then spend more time in providing value-added advice to the organization's benefit. I think getting a seat at the table would be primarily important for me from that standpoint, John.
So if I could add to that.
Sure.
Yeah, I do have a comment. One of the things that, tax department traditionally is working on getting the tax filings, getting all that data together and sending it out the door. So freeing them up from gathering that data, and sometimes it's data that's was already gathered or is readily available much earlier in the process. Things like VAT registration numbers. Every invoice that comes in from a supplier has that VAT registration number on there. But there's so many tax departments that are filling that out on their filings, are not storing it in the database anywhere for repeatable processes. So once some of that time gets freed up to move from creating piecing together the data, you actually can look back at the data that's coming out and identify where are there problems, where there are mistakes. Just something simple where maybe your suppliers are charging you tax for something that you actually have either direct pay permit or some other exemption that you haven't made those suppliers aware. You might be paying taxes that you absolutely don't need to pay. And so that's when I see wins like that of identifying, okay, now I can be on top of the process and see it early on rather than noticing months later when you're pouring through the data and realizing, wait a minute, we didn't need to pay this. Those things, that shift from looking at things coming in at the beginning rather than chasing after the fact can really provide some strong benefits for a company. Challenges, for just trying to work on these projects, it can be very hard for the tax departments to,
because they have a day job, right?
Yeah, to switch their focus as well. It's not just other teams aren't accepting that, oh, this tax department can add value. It's simply, I liked your phrase, they're more like just a cost center. But it's also, it can be a difficult shift to make. Sometimes it can feel uncomfortable. You're used to gathering the data, doing the reports and checking it off and not necessarily realizing that you can shift your value to analysis, looking at the data coming in and get that streamlined up front.
Great, thanks. And so I know when we think of automation too, there's often spoken about the need to have a long-term vision, right? So when we think of companies that are going to really have some full-blown tax automation, it's a project, right? There's requirements gathering, there's working with partners such as yourselves, and certainly you're going to implement and execute and test as best you can. And then there's a go live, and sometimes that's a phase go live by region, like it's been referenced with some of the examples earlier. Sometimes it's a big bang where it's a go live across the globe, et cetera. So as we think of the long-term aspect of automation in these projects, what do you think the stakeholders, or who are the stakeholders in the organization that will benefit the most, if you will, and who are the most important to have as stakeholders for a project to be successful? Any thoughts there, Kate?
Yeah, so for stakeholders, I like to see that there's a cross-functional group of stakeholders, and there's a real synergy to doing an ERP project as a whole, to having the tax automation occur along with that ERP project, because that can really help make decisions early on. How is the data structured? What are your material groups going to look like? Are you going to use something standardized, harmonized codes, UNSPSC, commodity codes, things like that, that if the tax department is in as a stakeholder of an ERP project, that can be very helpful with, I know that's backwards from what you were asking, but, it can be very helpful with getting the entire structure pulled together well, so that ERP is going to run smoothly, integrate beautifully with the tax engine, and really maximize the values from it. So if I change that scope a little bit and look at it from not the ERP project with tax being a strong stakeholder, but the tax automation project, maybe it's coming in just after an ERP implementation, having all of the purchasing group, the accounts receivable, order management, getting the stakeholders in. Accounts payable is a team that really needs to be strongly aligned with the tax department. They're going to see benefits as well, just working from that level. And then if you look up at more of the higher management level, they should benefit from more streamlined, I'm not sure the word I'm looking for, but basically just the business processes with the tax integrated in it, as well as getting more information about the picture of what it is they're buying and selling and how that's going. And audits, we haven't really talked about this, but one of the reasons to do automation is to be transparent, to have repeatable processes, to have standardization that really is very helpful when an audit is happening, that the auditor can see, okay, these transactions are going through consistently and they meet the right definition, is coming out with the right result. That should provide a comfort level that there's a reduced risk of negative audit findings that come with fines and fees and whatnot for your company. So there's stakeholders all throughout the company will benefit from tax automation.
Yeah, I would agree. I was thinking, what are all the stakeholders, Kate, while you're describing your experience there? Initially, I was thinking maybe CFO, signs the budget and the SOW. I'm trying to imagine, like, okay, CFO would be a stakeholder because he wants everything get done in as little as possible, but as good as possible. Like, quality should be there, but price should be down. But I'm also thinking from a chief technology officer or information officer might also be involved from automation standpoint. Like, he or she might be more interested in, hey, are you automating? How much are you automating? Okay, once you do this project, does it mean my team doesn't have to support tax department anymore, or is tax department self-sufficient? I think the stakeholders, I think to that question could vary from function to function. And I have a client, they have a shared service center for their finance organization, and tax is part of the finance. Now, the person who's overseeing the shared service center was the stakeholder in that case, because she wants to make sure that the shared service center, which tax was part of, is functioning smoothly. So I think the stakeholders could vary, John, I think, in my opinion, to that question. From a long-term vision standpoint, I think the question you asked is very relevant. I think the tax departments need to think through that question. Hey, who are our stakeholders? And it can vary. And I think identifying those stakeholders is probably very important. And also knowing what the company is going through and they might not be aware of, because I know there's another client where they were implementing, they were replacing their procurement process with Ariba, and the tax department was not even aware of that engagement at all, because nobody thought through that. They thought, okay, I have one source that's talking to SAP, but on the front end, there is Ariba, which is a procurement system that was being implemented. They didn't have it before, but they did not think to include tax, and tax did not, think that they need to be involved as well. So there's a level of maturity and awareness that need to happen. But I think asking, hey, who are my stakeholders, and then understanding what are the projects going on, whether there's a finance transformation procurement transformation or even like digital transformation, right? I think just staying plugged in to the major activities in your organization can help identify those stakeholders too.
Great insights. And yeah, I think one thing I've noticed too that can be helpful, to your points on stakeholders, both Kate and Sai, is after a project has gone live, right, if there are different phases to it, go back and share those benefits to the stakeholders, right? So then you have even more powerful buy-in as you hit the next phases. But the great points
People
there.
want to see results. You're right. Results speak for themselves. Yeah. Definitely.
Okay, great. So now as we think of some of the practical steps to move forward with automation, can you give some good examples of how to deploy from best practices perspective? If we think of the tax data journey, how to enhance data across operations, in general, what have you seen as some of the, just a couple thoughts on some of the best practices on how you deploy in these types of projects? And with that, Sai, maybe you could lead us out there.
Yeah, I can share some examples. A lot of times I think we tend to think in silos, and that's okay because we all specialize in certain areas. Like I tend to think more on indirect tax if that's what I do. And somebody else will think more on SAP side because that's what they do, or like CFO might have a different vision. From a best practice standpoint, I quote this from some other VP of tax that once mentioned it to me. When she looks at the data that a transaction, whether it's a purchase that an organization has made or a sale that they did to a customer, whether it's indirect tax, which is sales and use or VAT, or property tax, right? You got to pay tax on your assets, fixed assets, whatnot, or income taxes at the end of the whenever the time is due. They're all relying on that transaction at the end of the day. I think if we have that comprehensive outlook on your projects and then don't design your systems and solution in silo, I think it can reap benefit. So what that means as an example would be if the income tax team wants to know their state tax apportionment, the OneSource indirect tax project that we have done for sales and use should be able to serve the need of the state apportionment data needed for the income tax team. So I think having the visibility across, whether it's different tax areas. I mean, I just gave 3 examples, but if you can apply to intercompany, international transactions, cross-border, et cetera, I think thinking through what that data means and across these various verticals, and then come up with a solution that satisfies all. It might be hard at first, but I think once we have a framework to accomplish it, will provide much more benefits with automation.
So I'm going to add on to that.
Great, Kate. Go ahead.
John, I keep jumping in on you, huh?
No, please do.
Okay, so what I want to add to that, when I look at best practices, understanding your tax use cases is one of the phrases. And this is actually something that, I've recently joined Chordiant. It's really been maybe 13 months now, just over a year. What I liked about Chordiant as a company is the investment in RPA, and that speaks to assisting the tax team to identify what those use cases are. Exactly what, if they're doing business in multiple different countries, purchases, sales, and whatever, it can be hard for somebody to just gather up all that information. If I just simply ask, the tax team, give me your use cases, there's often a struggle to really pull that together. And so it's helpful for me to have a tool to help pull that together, because that's a best practice to really understand what it is, what's the scope of the project, really, what are those use cases. And then, another best practice piece is, I think we've talked a lot about this, but having that communication between the teams, sort of an understanding that tax is not, sorry, I'm just taking this from you. I'm gonna hang on to this for a while. Tax is not a cost center. It's not just an expense to deal with. It's really something that should be integrated into the processes, into, in each step of the way, to make sure that the data is being gathered right, and, that the information is there. So, communication, I guess, would be another key thing, a best practice to really make sure that the teams are working cross-functionally together. And testing. Making sure that you are robustly testing all of the tax use cases. And there's so many clients that I see this at. There's, when the test scripts are being built, certainly for an ERP implementation, the focus is looking at the various work streams. Maybe there's a different flow for shipping something, things like that. There's a focus on those work streams, but there can be a little bit of a pushback on, why does tax need 47 different flavors of this one work stream? I've got it. This work stream works. So that can be a little bit difficult to communicate that actually there are 47 different flavors. And that's something that if you can have, again, an RPA tool run a lot of those tests and a lot of those calculations for you ahead of time, then there's less of a push with, maybe the ERP has individual people running these through. You can really make sure that you've received all of the right information, and that it's going to work when you have that testing with all those different flavors of what appears to another group to be just one single transaction. So that's, I guess, another best practice, is really make sure that you've tested things thoroughly, and that you understand you have that scope in there. And another one that I want to bring up does have to do with the master data. And this is, really on the purchasing side, is to classify your purchases, your material groups, your product families, whatever. Different ERPs refer to these as different things, but making sure it's really nice to see if we can get in some kind of standardized methodology for it, such as using UNSPSC codes. That when those are put in, that really streamlines things, in a tax project. And those are sort of details within the project itself, but I think that they're pretty key. If you can get those things to happen, you're going to have a really smooth implementation.
Great, thanks. I think that's all very helpful information. And I'm going to pick one out quickly from the chat here, and maybe just it's going to just ask for your best guess percentage-wise. The question from the chat is what basically percent of companies do you see looking at automation from a global perspective versus, let's say, just their U.S. tax operations? Maybe we can start with you there, Kate. If you had to take a best guess at a percent.
Yeah, I'm thinking about the projects that I've worked on, and truly most of them have been for international companies, that have an international footprint. And, percentage-wise, I guess I would say it's almost 50-50. Some of those companies have been really focusing on let's get U.S. and Canada handled, but I would say at least half of them are looking at it worldwide, globally, really trying to make that all sort of a repeatable process and make that visible amongst the tax departments.
Sure. And Sai,
I don't know,
put
Sai, do you have a
on it?
different experience?
Yeah, I think I kind of peeling that question a little bit. I think, Kate, I would agree 100%. If it's a tax engine automation, I think a lot of companies would say, let's get US and Canada with it, tax engine, because from an indirect tax standpoint, it's just too much, right? Number of jurisdictions in the United States are a lot. From a rest of the world outside of United States, they would think, hey, why can't I just deal within the ERP system? So I would say in the US and Canada, there's a heavy emphasis on automation with the tax engine. Rest of the world, there is still a level of comfort in just not using a tax engine, but relying on the ERP system. I would say percentage-wise, that could be really low. When I think about number of companies globally that actually use a tax engine, there's still plenty of companies that don't use a tax engine globally, John. But I think when you say automation, I think there's an effort at this point, whether they use a tax engine or try to do it within ERP. I think there's a level of effort that I'm noticing they do want to automate. I think a lot of times it comes down to the business case. And in my mind, based on my experience, there's always a strong business case in using a tax engine because the ERP systems are not inherently built to support these regimes and rate changes and rules, et cetera. So, yeah.
Great, thanks.
Can I just add a little bit more to that?
Sure, and just a quick time check there, Kate. We've got just a couple minutes left, but please do add, and then we'll go into sort of your final thoughts and recommendations right after that, maybe 60 seconds each, right after you add this comment, if that works for you both. Thanks.
Yeah, so the only comment I was going to make is for the international implementations that have been implementing globally, many of those have organized themselves with shared service centers worldwide. And when you have a shared service center, you don't necessarily have people who understand the different countries and the different nuances in those countries. So it does become critical at that point to have some kind of automation in place. And there's a lot of benefits you can get when you're arranging that way. And some other, there are countries that do have very complex taxation. US obviously is a big one that there's just so many jurisdictions going on, but certainly Brazil and India add a level of complexity as well that having some automation can help, especially if those resources are not in Brazil or India to have that assistance. Okay, and I'll turn that back to you to get to our last question, was it?
Right. Yeah, so last question. We're down to about a minute here. That's all been great insights and perspective, and your sharing of experiences, I think everyone's going to find helpful. But with that being said, maybe, Sai, we can start with you, final 30 seconds from you, and then 30 from Kate. Your last thoughts, your key takeaway, whether it be around the overall expectations around automation or how RPA can be worked in, or whatever you would like to share as sort of a final thought with our attendees here today. Thanks. Yep.
I think we covered a lot of ground today, I think, on various topics. I think in summary, I would say getting a seat at the table for tax is critical. I think that's number one. Whether it's identifying the key stakeholders or understanding the key initiatives that are going within the organization, and then aligning your objectives with their objectives would help. I think getting a seat at the table would be one. And then once you do get the seat at the table, understanding what can be accomplished with your automation, right? I think you need to be very clear and how it can be accomplished and what are the benefits of automating. I do have to stress that 5 years ago, I think RPA was non-existent today. It has come a long, long way. So the amount of effort and money that you need to spend in implementing something is not as it was 5 years ago. I think companies can implement tax engines much more smoother and faster at a lower cost with these RPA platforms today. So understanding, that and then leveraging that would be helpful.
Great, thanks, Sai. And Kate?
So I will add to that. As I mentioned, knowing your what you have, what's available to you, and utilizing an RPA tool are really more than just a tool, more like having an RPA platform to assist in implementation really does make it a smaller impact on your team, on your department. As far as, getting ready and dealing with the rapid changes that will be coming, that we've already started to see, even with COVID and just the way businesses are interacting today. Know what you have. Look for maybe even somebody who can come in and help you identify what it is that you have in your existing implementation, and working on those implementations. Testing is huge, and that's something that RPA shines at, is really able to hit all of those cases, everything that you've identified, to be able to run through those really quickly. So I think that's something to know and to think about if you're looking at embarking on an implementation. And also know that these implementations can be done remotely. It doesn't require a huge level of resources on your part. It's a doable thing. That 10 years ago, it might have been a huge endeavor. It's not such a huge endeavor these days to be able to do it with some of these automation tools that are available to us. It can really help move things through. And then the last thing I want to say is communication. Work on communication between departments. And, if you have everybody engaged and on board, things can go really smoothly.
Great, thanks. Well, I think we've covered a lot of good ground here today, a lot of interesting insight and perspective from both your experience, Kate, and you, Sai, and hopefully the audience also sees just the value that having professionals such as yourself with all their implementation experience can bring to these projects, because there's a lot to think about when we think of automation, as was shared on the call today. So for those attending, we really appreciate your joining us today. Again, we'll send out a recording. We'll respond with any additional chat questions that we were not able to take with the time that we had today. And I'm sure Kate with Cordiance is happy to have discussions as well with anyone that's interested, and Sai with Grant Thornton as well as of course, the team at OneSource is always happy to chat individually with companies about automation. It's what we do, and it's what we're passionate about. So thanks everyone for joining in today. And I hope everyone has a good one. Thank you.
Thanks, John. Thanks, everybody.
Take care.